This next breakdown should be an interesting one. It's going to be on Clorox stock, which would usually be considered to be a safe investment as far as investing goes, but it's not looking too good at the moment. But we'll have a closer look and see what's going on. So the ticker symbol for Clorox on the New York Stock Exchange is CLX. It currently costs $141 per share. It pays $1.20 per share 4 times a year as a dividend. The next ex-dividend date is the 23rd of January, and that will be paid out on the 9th of February. Like a lot of stocks, it has been on a bit of a downtrend recently. It is up 6% in the last month. It's down about 9% in the last 6 months. And after the recent bounce up from the low, it's down 5.6% in the last year. In the last 5 years, however, it's about 14% down. Its 52-week high is $178 per share, and its 52-week low is $114 per share. So it's about smack bang in the middle of those two at the moment. I started my position on the 31st of March of 2021, and I'm about 8.8% down. So a quick overview on Clorox. And there's a total of 5 potential points that I can earn in this section. So Clorox was founded in 1913, so this year it's 100 years old, and that earns it 1 point out of 1. Clorox operates in the consumer non-cyclical sector in the personal and household products industry, and it's based in the USA. It has about 8,700 employees, which earns it 8.7 points out of 1. Clorox operates through 4 segments, which are health and wellness, household, lifestyle, and international. So they sell cleaning and disinfecting products, professional products, bags and wraps, cat litter, grilling products, food, natural personal care products, water filtration products. And then the international segment has laundry additives, home care products, digestive health products, grilling, a whole range of products that they sell. And it sells its products in over 100 countries around the world. So for the product and services mode, it earns 0.5 out of 0.5. And for the locations it distributes its products, it also earns 0.5 out of 0.5. The current market cap of Clorox is $17.82 billion. That makes it a large cap company and earns it 1 point out of 1. And the current analyst sentiment and news with Clorox is where it starts to get a little bit shaky. So the first one I'll check is just a quick Google search. And according to that, 3 months ago, 8 analysts said hold, 2 said it was underweight, and 6 said to sell. So the general consensus was that it was underweight. But now it has 11 hold ratings, 2 underweight ratings, and 5 sell ratings for a general consensus of hold. So it has improved a bit in the last 3 months, and we've seen on the graph it has bounced back off a low, but it's still not great. Then on Wall Street Journal, we can see here on the right, at the moment they have 3 buy ratings, 1 overweight rating, 11 hold ratings, 2 underweight ratings, and 5 sell ratings for a general consensus of hold. Also, Tip Ranks gives a similar rating, 2 buys, 8 holds, and 6 sells for a general consensus of hold. Then on Yahoo Finance, over here on the right, we see the same story, general consensus of hold. Then on Benzinga, it's the same thing again, but more sell ratings. We've got 2 buy ratings, none overweight, 9 holds, 4 underweight, and 5 sells. And a little bit of the news at the moment. It looks like the cybersecurity head of Clorox has walked out after a cyber attack has caused a lot of disruption, and it's greatly affected the distribution of products. Not good. So unfortunately they have had some bad news recently, so that means that Clorox has earned 4.37 points out of a potential 5. And the next section is the valuation of Clorox, just a basic one. There's a potential 4 points that I can earn in this section. So Clorox has a current revenue of about $7.4 billion. That's the total amount of money coming through the business. Their profit margin over the last year is 2%, so not great. But over the last quarter is about 8.7%. So quarter 3 of this year was pretty bad, but it has recovered since. And that will earn them 0.5 points out of a potential 1. So Clorox earns $4 per share, and their price to earnings ratio is 35.2. And the average for the industry appears to be 46.54. So this indicates that Clorox is trading at a price to earnings ratio below the average and therefore could be at a good price. So out of a potential 1 point for this part, it earns 1 point. The next thing to look at is their debt to assets ratio. Over the last year, they had $5.95 billion in assets and $5.73 billion in liabilities, for a debt to assets ratio of 96%, which is pretty bad. It is very bad. And over the last quarter, it's the same story. So out of a potential 1 point, it earns 0.1 points. And the last part here is their cash flow, which is also looking pretty bad. They have an annual cash flow from operating of $1.16 billion, from investing is negative $223 million, and from financing is negative $750 million. And a quick look at their operating activities, it's not looking too good. The 5-year trend for their net income growth is down 65%. The good news is that their net operating cash flow growth is up 47% this year. It was pretty horrendous in 2022 and 2021. This is a deeper look into the investing part of their cash flow, also looking pretty abysmal. And a deeper look into their financing activities, it tells the same story. It's not looking good, unfortunately for us all. The only positive I can see is their free cash flow growth is up 73% from last year. So out of a potential 1 point, Clorox earns 0.4. So out of a potential 4 points for its valuation, Clorox only earns 1.9 points. And for my favourite section, the dividend, there's a potential 6.5 points to earn in this section. So the first part is the frequency, and Clorox pays a dividend 4 times per year. That earns it 0.8 points out of 1, and it doesn't get the 0.2 bonus points because it doesn't seem to pay special or bonus dividends. The second is the dividend yield, which on its own isn't hugely important, but it pays $1.20 per share. That gives it a current dividend yield of 3.4%, and because that's within the 3 to 5% sweet spot, that earns 1 point out of 1. Then we have the dividend payout ratio, which is here. It currently pays 80% of its profits out as a dividend to shareholders. That earns it 0.5 points out of a potential 1. And the average annual dividend growth rate does look quite good, going back to even 1981. All of this section here is just speculation, so I would ignore it. But it does have a forward dividend yield of 3.37%, which is within the 3 to 5% sweet spot and earns it 1 point out of 1. Clorox has raised its dividend every year for the last 47 years in a row, meaning it's almost a dividend king, which would be 50 years or more in a row. That earns it 0.8 points out of a potential 1. And according to Full Ratio, Clorox has a history of paying dividends since 1995, which also earns it 0.8 points out of a potential 1. So overall, out of a potential 15.5 points to earn, Clorox earns 11.17, which as a percentage is about 72%. So not the worst, but also not great at all. I think the next one I'll do will probably be realty income, because I think that would be very high up. Could be the highest that I have in my portfolio. But if I had to make a decision on whether or not to buy Clorox at the moment, compared to a lot of other great stocks, it would probably be
no.